Now, for this session, as I said, it will be very interactive. I'll give open remarks, opportunity to each of the panelists based on what Deborah has shared with us. She shares from her wealth of experience. And I must say, Deborah was involved in housing finance, designing programs for developing countries in IFC for a long time. And she's here with us to share this experience. We'll still come back to her. So we'll have for the panelists open remarks about 1 minute based on what she has shared and based on their experience worldwide. And then we can take it up from there. So from this point, I hand over to Mr. Adeshomoye to start with. Thank you once again.
Thank you, moderator. Thank you, Mr. Moderator. It's a pleasure to be here again for the 19th AIHS, African International Housing Show. It's a pleasure to be here again. Thank you for the introduction you have given. I will just mention some of the points that Deborah made that we also have here, and the things we need to do is to move them forward. Now we have very good opportunity that the federal government has created in the fact that the federal government now has a will, political will, that has been actualized in being able to be supportive in the housing. The Kasina project and all the other ones that are going on in the state. So it is an opportunity for us to move beyond the housing supply, because over the time, we have always been addressing more of the supply side. Most of the people managing have been discussing more of supply side. But for us to move forward, we need a demand-based supply. Just like the Japanese approach to the market for Toyota. They have to look at the size of your pocket to build vehicle. So we will continue to have this problem if we do not spend time to study the demand side. Challengingly, because the demand here, where we are not penetrating, is largely informal. And the economy is driven by over 65% informal. So the data may not be as available, but there's a way to enter into this. There is no one size fit all in the housing. We all have different model that has its own place, because Nigeria has from rural to international market and different varieties of income. When we have housing supply disconnect, we have a lot of big houses in the town that people cannot uptake. So, first of all, we need to fix the system. Number two, we have uniform underwriting standard that should be deployed now. We have uniform underwriting standard that have been built for the system that we need to adopt from those supplies that we have now. We have underwriting standard for formal, informal, non-interest, and different 5 underwriting standards, including for diaspora. We are mortgage refinance company. We also have emerging mortgage guarantee company that we have already created on the ground to address the issue of insurance that you are talking about. So it's just to catalyze this, because while I was in the service, we have created framework for licensing all these institutions. So our supply side need to have a demand base. You cannot be supplying beyond the market. So I am thrilled about the young man who came up today and had 4 million house, 4 million constructed house. We need to start from there. We really need to engage, because the income of Nigerian, whether in the formal civil service or in the informal sector, where you have a larger number of people, you need to study before you can supply. Let me pause here so that others can be able to have immediate intervention. Thanks.
Okay. So now I'll call on Mrs. Yemi Olusoya. As we said, you're an investor in Alaro City. Alaro City, it's a Lekki free zone on the way to Ekwe. 1,000 hectares of land, going to 2,000 hectares. They have houses there. She'll talk more about it, and she'll also share with us. She'll probably talk more on the supply side, what they have done in Kenya, in Taout City, and what they are doing in Nigeria to ensure that we reduce our housing deficit. Thank you.
Thank you, Mr. Moderator. Good afternoon, everybody. One thing that stuck with me in the closing remark in the presentation is the fact that we need to be able to come up with African solution to solve our African problems. So that really stuck with me. So I'm excited to be here and to share with all of you and to learn also how we can come up with this our African solution. So Alara City Project is the flagship of urban development initiative in the Lekki Free Zone area. It is conceived, as was earlier said, on 2,000 hectares of land. So Alara City Project is a partnership between the Rendezvous Group and Lagos State government. Rendezvous is one of Africa's largest new city developer with over 12,000 hectares of development all over Africa. The flagship projects are in Kenya, as earlier mentioned, Ghana, Zambia, Nigeria, and of course the Democratic Republic of Congo. So these projects are scalable, adaptable, and the model is what is being replicated in the Lekki Free Zone in Lagos State. So there are basically 6 pillars or strategy that worked in Kenya's Tattoo City. Number 1 is to secure the land. Number 2 is to ensure infrastructure. Number 3 is effective zoning, a comprehensive master plan, efficient city management, and of course, continuous development. Also the use of the Korean formwork technology, which is fast, efficient, and affordable. Those are some of the things that was done in Kenya and is being replicated here in the Lekki Free Zone. So this standard ensure sustainability, reliability, and long-term functionality. The project in Alaro City is the universal home. It's 288 units of homes, and it's already 95% sold. Phase 2, of course, is under construction. Technology transfer is also something that definitely contributes to the development, the sustainability and development of this industry. Thank you.
Thank you very much, Mrs. Jami Olusanya. We now have, we want you to weigh in on this. Wale, I know you represent Lanre Akinshola, who is unavailably absent. She's the CEO of, you talk more about that. You're also the director of Brooks, so I think I'll yield the floor to you to talk more about that. And then also to weigh in terms of experience of Brooks in housing Nigerians, and of course your own global experience. Please, over to you. Thank you.
Thank you very much. My name is Wale Bangbelu. Brooks basically at this present time is trying to deliver 1,000 homes in Ekiti, trying to deliver 3,500 homes in Imota, and about 1,000 homes in Ipaja. Now, we are really struggling, and one of the key issues that we have is actually government intervention. And so when I say government intervention, you need off-takers. Even if you get off-takers and the government is providing incentive like the estate development loan, you still need off-takers that will present their data so that you can get the loan. Problem is that they don't have that level of trust that the buildings will be delivered, government will provide that infrastructure to enable the developer to actually build. So, and I'm picking from Deborah's presentation. She mentioned, I could remember about 4 times you mentioned government intervention in providing transport and services, tax credit, and providing all sorts of incentive, which is key. Because, I mean, I'll give a typical example. I was seconded to Nigeria in 2009 to deliver the Lekki Toll Road. I was fortunate to manage high-tech in delivering that road. Within 6 years, the whole corridor changed when you have the infrastructure. The road expansion built, I think, probably about 5,000 homes. Just that expansion. The whole corridor was the fastest growing corridor in West Africa. And that's government intervention. If we didn't have that PPP agreement to expand the road, that place will not be as it is now. So it's very important that we get government intervention. We have off-takers, but off-takers are reluctant to provide details to enable us to access the loan. All those loans or the incentive that the government has provided to provide the enabling environment for developers, it's very difficult to actually get them without the buy-in from the off-takers. So you need them. So it's, I'll just stop for here.
All right, thank you. We now go over to Mr. Ajao from City Code.
Okay.
Yeah, please.
Good afternoon. My name is Ajao Oluniyi. I'm the acting managing director of City Code Mortgage Bank, and I'm standing in for my former director on this exalted panel. So picking from the presentation from Deborah, I think one of the high points she mentioned was that there must be a goal alignment from everybody in the housing value chain, which I believe is very, very important. Because if there is no goal alignment, it may be that everybody is just pursuing different goals, and at the end of the day, will not be able to achieve what is actually before us. So everyone in the housing sector must understand this is what we want to do, and everybody on the same page according to his word. So if that is done, I believe everyone in the housing value chain will be able to work towards a common goal and be able to really face this challenge and then also put behind us. And coming back to the issue of government intervention, and I think she also made a remark and said that we must make every house a home. And like the last speaker said, we need government intervention in places where you need this infrastructure to actually make all the housing actually a home. A home. So that's very, very important government intervention. And another point she mentioned, which is in form of a government intervention, is this kind of tax credit in situation. I think Central Bank has had one program like that, but I'm not sure they actually push through with that program. I think they call it interest drawback, in such a way that if a mortgage bank can give a loan at a certain percentage, they will go back to CBN, and CBN will kind of match their fund bank for them. So I think we need to look at that too. And thank God, recently with government intervention, we know that MREEF is coming on board, which when it was starting, we were thinking it's going to be double digits, but good enough as things are getting set. We've learned that MREEF is coming at a single digit, which is really going to help in financing these 200 million. We believe it's going to go a long way, and we believe as they move on, most of these things we make the housing gap that we have in the country to really be bridged as we go on. Thank you.
Thank you very much for that intervention. We'll now hand over to Frank from Jobo Max Capital. Can I have the mic? Thank you. But just before Frank weighs in, let me make some comment. I think certain things have come out boldly based on Deborah's earlier presentation. One is she actually expressed her fears and concerns whether in Africa we are mortgage ready. She said that, she indicated that, and that's because if you take that and reconcile with what Wale said earlier, they have houses, right? And they can't get off-takers. Yet it's almost like somebody close to the sea, so much water, but not any to drink. Not a cup to take from the water to drink. In other words, perhaps it's the design, perhaps it's the products. Yes, we have mortgages. We have from NHF, we have all of that. But perhaps, as we said, some of these off-takers, they cannot meet conventional mortgage requirements in terms of equity contribution, in terms of income level. And she actually indicated that perhaps we should be looking at rent-to-own. We know we have rent-to-own products. Mr. Ideji mentioned earlier about these standards. We have underwriting standards for non-interest as well, for rent-to-own. Maybe these are the areas where more fish will come in. And I'm happy, yesterday, the managing director of Federal Mortgage Bank talked about them having non-interest loan now available. Perhaps because some of these people cannot meet mortgage standards, commercial, conventional standards. Rent-to-own will be the way to go. Because some of them, they are informal sector, whether you like it or not, they are presently living somewhere. And they are paying what? Their rent monthly. From the mega money they make, they also pay their health bills. Their children fall in and they pay their health bills. From their mega money they earn as well, they also pay school fees. So which means there is income coming to them monthly. It may not be something that will meet the conventional mortgage standard. So maybe these are the areas where we need NHF, Federal Mortgage Bank, we have Family Loans Fund, and of course, MOFI to look into how can we bring these people outside the mortgage corridor, housing finance, into the space so that we can clear up the excess supply we have in these areas. Thank you. So please, over to you now. Thank you.
Thank you. I too, Deborah, have a little bit of concerns about the mortgage system here. But if we truly want to solve the affordability of housing in Africa, in my opinion, we have to talk about scale. It's a game of big scale. And the irony with that is the fact that we also have a huge demand for housing at the same time. So the scale is there. We just need to find a balance between both. And since yesterday, I listened to many interventions, and every single intervention had the right solution, the right ingredient to make housing work. But I think we need to start looking at housing as an engine. It's like a car. If one part doesn't work, the other part wouldn't work. And I will generally break down housing in four major parts. There's the supply, there's the developers, the constructors, the financing, which are the banks, and we have secondary markets to just make the whole engine circulate. So when we live in I think there's a professor that mentioned yesterday that there's only 4% of available land in Nigeria that's titled. That's another shocking statistic, because if you have all the money in the world to finance, you can't do mortgages because there's not available land. And vice versa, if you have land and we don't want to issue mortgages, it still wouldn't work. So we need to make the entire engine work, from supply of land to the mortgages, and also making sure that those people issuing mortgages are not stuck with that, because you can only afford so much mortgages. So the government also has to get involved to make sure, we call it securitization, to just make sure that that engine is recycled. And for me, it's a very simple problem. It's massive, but it's simple, but it has to be looked very holistically. Someone has to be in charge of making sure that each part of the engine is functioning. And with that way, I think in just a year, we can make tremendous progress by just moving things along in a full circle. So I do have that concern, But I think we should continue to advocate for the effectiveness of intervention and just trying to look at solutions all together, not just separately, because then it doesn't fix the whole thing.